You know that feeling when you're grabbing your latte in the CBD and you overhear two blokes talking about using Bitcoin to pay for their Reno supplies? Yeah, that's not hype anymore. It's happening right here in Melbourne, and the numbers are starting to show it. But globally, BTC just dipped below 100k AUD again. So, is this a healthy reset or something more? Today, we're diving into the latest Australia's push toward proper licensing for exchanges and custody, plus why institutions are still piling in despite the red candles. Stick around. I've got the CRYPTOLOGIC takeaway at the end to tie it all together. This segment is brought to you by cryptology.com.au, your go-to hub for in-depth Aussie and global crypto news. First up, the local scene. And it's genuinely exciting for us down under. Australia's Senate Economics Committee just gave a big thumbs up to Corporations Amendment Digital Assets Framework Bill 2025. What does that mean? Crypto exchanges, wallet providers, and custody services will soon need proper financial services licenses. Think consumer protections, capital requirements, the works, aligning them closer to traditional finance. This isn't about killing innovation. It's about making the space safer so everyday Aussies and institutions feel confident jumping in. We've already seen crypto payments double in the last year or so, and clearer rules could turbocharge that. Imagine paying your rent or a tradie with BTC without wondering if the platform's about to vanish. On the AML front, AUSTRAC's expanded rules kicked in harder from late March onward, wider coverage for VASPs, stricter reporting. It's transitional pain now, but long term, it builds trust. Melbourne's crypto meetups are buzzing about this. People are actually planning businesses around compliant setups. Now, shifting global, two big stories driving the narrative. One, US Bitcoin spot ETFs continue seeing solid, if choppy, inflows despite the recent dip. BlackRock's IBIT and others pulled in hundreds of millions last week alone. Institutions aren't running, they are accumulating on the weakness, treating Bitcoin or BTC more like digital gold than a quick flip. Two, macro pressure is real. Hot inflation, prints, and geopolitical noise, think oil volatility, have traders de-risking, pushing BTC down from recent highs near 100,000k plus AUD. But notice the support, excuse me, the support holding around 95k to 98k AUD, whilst are buying the dip, and open interest isn't collapsing like in the past corrections. All right, time for a quick laugh before we get serious. Here's today's original one. Why did the Bitcoin go to therapy in Melbourne? Because even after hitting six figures AUD, it still felt like everyone was just fiat shaming it for its volatility. Okay, time for the CryptoLogic takeaway. We're at an inflection point. Australia is finally building guardrails that treat crypto like real finance. Licensing, AML upgrades, consumer protections without suffocating it. That clarity is a rocket fuel for adoption here. More businesses accepting BTC, more everyday payments, and institutions parking capital locally. Globally, the institutional bit remains the floor. ETFs aren't going anywhere, and BTC's narrative as a hedge is strengthening even if short term macro is choppy. Bottom line, this dip feels like consolidation before the next leg up, especially if regs solidify and inflows stay positive. But always remember, I am not a financial advisor. Do your own research, manage risks, and never invest what you can't afford to lose. If you're in Melbourne or anywhere in Oz, are you already using crypto for payments? Drop it in the comments. What's your go to use case? Hit subscribe for daily updates, turn on notifications, and check out cryptologic.com.au for the full write up. Sash from Cryptologic, stay sharp out there. See you in the blockchain.